What do you think it is to find? How do you find those good investment properties? If you got an investor, you're working with me, I want to come to you, I want to buy something. What are the type of things you're looking for on those?
Passing the math.
Yeah.
Does it pencil?
Does
So
it
that's
pencil?
what I was getting ready to touch on with you is I see a lot of people who are selling what have been investment properties with active tenants in them,
Yeah.
and they advertise them as immediate cash flowing properties. And I'm not a savant at math by any means, but I
Right.
know credit to my father for kind of teaching me some core principles on pricing out a deal. Just if you see something listed, figure out what it rents for.
Yeah.
I generally know what they're looking for in terms of like, I can't really run off the 1% rule like I
Yeah.
used to.
Right.
It's a rough way to start.
Right.
But I see a lot of people who, let's say you've got a duplex listed for $265,000, yet you're only getting $1,000 aside.
Yeah.
I'm gonna have to put how much down?
Yeah.
I'm gonna put a lot more
Right
down than
on that.
20%, right?
For
I
sure.
generally plan on having to put 20 to 25% down.
Yeah.
But I see somebody advertising something that says it brings $2,200 global income, but you're asking $265 for it. There's quite a wide delta
Yeah.
there.
Big difference in gross and net there when it comes to those type of things. What about condition? Is it a lot more important one condition, or do you feel like that's a little different game than what it is for maybe somebody who's going to be moving into the property?
I'm probably a good and bad person to ask this question to, but I mean, everything has a price.
Yeah.
So with respect to an owner-occupant situation, time can be on your side.
Yeah.
I know that immediately once I take possession of an investment property, I have to then turn around and make income on it. Can I ask the same amount of rent for a place that has mold in a crawl, a bad HVAC, a water heater prone to leak, aged appliances, a bad roof, right? I have to immediately be thinking about the phone calls I'm going to get, or you, if you're my client, are going to get once somebody moves in there. Man, I'm giving you $1,400 a month, and I got water running through my ceiling.
Yeah.
Well, who's taking care of that?
Yeah, exactly.
Well, probably not a property manager if you bought that $265,000 duplex making $2,200 a month because you can't afford to pay a property manager. So that's you.
Yeah.
So that's where I try to sit down and say, do you want to be? There's no passive income in rental properties, right? That's the biggest horse shit I've ever heard marketed.
That's probably the biggest myth in real estate.
Doesn't exist. I got the calls at 3 a.m. to prove it.
Yeah.
All that to say, it can be a huge wealth building vehicle
for sure.
if you learn how to shop. So I'm looking at things like what are deferred maintenance items that are going to cost me over the long term. Because as a homeowner, owner occupied, you can ride some of those things out.
Right.
You can ride a fogged window out.
Right.
You can ride a busted latch on a window out, but I can't rent that to you with a busted latch that in the event of an emergency, when I'm not there to get you out, you can't get out of the house. So I have to go ahead and start figuring, okay, purchase price, less what I got to put down, less what I got to do, and then figure out what that delta is between what it would rent for right now versus what is market rent if it is improved.
Yeah.
There's no perfect science to it, but if you've done it enough or you're partnered with somebody who can help you guide into, okay, what are some little tweaks I can do to immediately raise rent value to justify paying this price? Or here's the thing a lot of people don't think about, the same thing on owner-occupied or non-owner-occupied. What can I negotiate with the seller?
Right.
Hey, I can get you to a number, and I'm going to have some things or some concessions to help me do these things. So if I'm not concerned about how much I'm borrowing, bake that into it and take it as a credit. Now, if I'm paying cash, I'm just going to try to get the best deal possible on the front end to keep taxes where they need to be for the long term. But I would say I'm just looking at things that I know I have spent money on, whether it's on my house or a house that I've rented to somebody.
Same.
And where are my blind spots and how do I negotiate those into?
Yeah.
There's a lot of people that make that harder in today's market because anybody with a tool belt and a truck has turned into a landlord. Yeah. And there's some people who are willing to pay $260,000 for that. That's worth $220,000.
Right.
I love my investors though because it's very quick and dry.
Yeah.
Like it either works or it don't.
Yeah. It's just math at that point. The emotion stripped out of it.
What do you make? What's the ages of things? What's wrong with the property? Let me get to a number that I know I can go to the bank and get my loan done because it's not that I want to do your job, but I've had enough conversations with you to understand what you're going to ask me for. Exactly. And I don't really see it as the best investment right now to go out and try to put 40% down on a property just to make it work with the current cash flow.
Right.
Any advice you'd have for people shopping for for a investment property, just from like the sheer number side?
Yeah, the same. I mean, everything you just said. It's really it's a math equation. Just making sure that the math makes sense. Looking at that, I think a lot of things that realtors don't take into consideration a lot of times is the appreciation rates. I think with investment properties, you always have to begin with the end in mind. you know, if you're going to acquire this property, is this a property you want to own for the next 10 years, 15 years, 5 years? What's your goal here? You know, is that so? I think that's a piece of it. A lot of times that you have to throw into the equation, because I tend to invest in real estate more for appreciation as opposed to cash flow. Obviously, I want it to pay for itself and generate a little bit of money, but I don't typically buy a piece of property that I don't plan to own for at least 10 years. And so for me, that's a big piece of it is what is the appreciation projections. No, again, not an exact science. Nobody knows exactly how that's going to go, but I want a pretty good appreciation rate out of it, just simply because when you compare apples to apples and just the math of it, I put my money in the S&P 500 and make 10%, and historically that's happened for the last 70 years. So I need that property to out-earn what I would earn just having it as cash in the bank or in the markets in order for it to make sense for me.
And then I think you look at, too, who is the borrower, because there are certain, and this is obviously not tax advice, so please hear me when I say that.
We'll make him put the disclaimer on
there are tax advantages to owning property versus owning a stock.
Absolutely.
Right? I can't write off my computer and my mouse pad for purchasing or trading in options or whatever.
Correct.
However, I can write off the fact that I had to replace an HVAC unit or the mortgage interest that I paid on that property.
Whatever.
So there are some strategies to that if you've considered this versus that, it's at least worth a conversation and exploring.
Absolutely, but that's really what it is. The magic's in the math when it comes to investment properties.
You got anything else you want to ask me?
I don't think so. Was there anything else on here? Did I get it? Did we get it all?
You've hammered it, buddy.
Sweet.
Good.
That's good stuff.